A. Balasubramanian is CEO, Birla Sun Life AMC. He's joining in from our studios right now. Bala, it's great to have you. Happy New Year to you, to your family, to your team at work, from everyone here at NDTV. First up, I just want to start by asking you, Bala, what are your thoughts on the market? Because many believe that markets will continue to do okay, but their confidence kind of shrinks when they talk about the real economy. That's tricky. That depends on a lot of factors. Some of it can be solved by the election outcome and the new leadership. Some of it, well, just can't be helped. It just will take time to solve itself out, like, very high structural high inflation and low growth. Those are the big problems. So what is your sense? Before I get to market, let me get your sense on the economy.
Yeah. Thanks, Prashant. And first of all, let me also take this opportunity to wish all the viewers a great year ahead, 2014. Definitely, I think about the points what you mentioned is right. More from the point that the economy is now seen the worst in the last year, with the GDP touching close to about 4.5%, and the inflation has been holding very, very high, and the interest rates as a result of that has also been very, very high. But given all these factors, and also given the fact that a lot of steps that has been taken by the government and the other policymakers in the last 6 months, 6 to 8 months, or maybe even in the whole of last year, a lot of efforts have gone behind in terms of ensuring that some of these concerns, which is largely affecting the potential of affecting the economic growth, is now being addressed one by one. The very fact that there has been a clear discipline that has been put aside to ensure that fiscal is maintained at 4.8% or below, clearly the efforts are being put to ensure that the fiscal deficit is contained. And second is the current account deficit. It's not that far off for someone to forget about it. But clearly, I think about 8 months back or 6 months back, there's a lot of worry that was there around the current account deficit, that it could potentially act as a threat for global flows in the country. Clearly, I think we have seen a significant improvement on current account deficit. Today, we are quite confident that the current account deficit in the new year will be less than 3%. In that sense, if you look at it, yes, there are certain things are not moving in the right directions, which largely is from the growth point of view. At the same time,
what you mentioned, which has gotten better, basically tells you that we are not exactly falling into the cliff anymore, right?
Exactly.
But that is okay. So that's done. But now, what about the bread and butter business, right? Which is, to sort of paraphrase it, which is growth, and what is going to be the trend rate of growth, and how low can inflation be at what level, and those kind of things. And those are the bigger issues. At the end of the day, yes. Now that the fiscal deficit, current account, etc., is in the backdrop.
Well, of course, yes, I agree with you. I think the every factors, the variables that is potential of affecting the economic growth are now, I would assume, that is being addressed. As I mentioned earlier, that current account deficit is one of the factors which has been addressed. Fiscally is now being addressed at this point of time through the expenditure cut, not through the revenue growth. At the same time, the good monsoons impact of that will get felt actually in the good harvest that is between Jan and March, which I think potentially could have a positive rub-off effect on inflation. And finally, of course, as we move into the election period, one, of course, pre-election, there is always the spending that happens, which will in some sense drive the economic growth back. And second is, I think when the new government is formed, I think there will be a lot of focus that will come from the government more on the execution of most of the policy framework that has been put in place, rather than focusing on reforms. I think probably the noise which we have been making for the last 3-4 years, that India needs a lot of reforms, probably as we move into the 2014 and 2015, we'll probably have the more focus on executions rather than actually the reforms. I think we'll probably have very limited the scope and the role which we may have to play on the reform side. Rather than that, probably the higher focus will come actually in the executions. That's why I think if you look at, we are at an inflection point. Definitely the sentiment has improved, and there is absolutely no doubt on that. At the same time, we are at an inflection point that we could see actually from here onwards the takeoff coming mostly on the execution front, which I think will help actually the economic growth to come back.
That may come only after the results of the general elections are known, right? If you're going to start something very big, you might as well wait till you get the new regime that you got to work with.
Exactly.
So that's going to be the thinking. But so to continue on that line of thought, many argue and say that not a lot of projects actually are viable now. So, for example, let's take CC, Cabinet Committee on Investments, right? And the projects that they have cleared. They're saying, well, 300 projects came to us for consideration. We've cleared all hurdles from our side, the government side, for 100 of these projects. Now it's up to companies to fund these projects, seed them with capital, and go ahead. But the problem now is that a lot of these projects may not be viable, or the companies who actually started working on these projects a couple of years back don't have the balance sheet strength to actually go ahead and execute some of this. Underlying business conditions have changed. Market environment has changed.
Exactly.
Right? So that's, I mean, actually that's going to be the bigger challenge. And I don't think anybody is talking about that very much.
I think if again you have to look at from two angles. One, recognize the fact that a lot of the projects are stalled. And second is recognizing the fact that these projects need to get revived. And then you take steps to actually towards reviving these projects. At the same time, also recognizing the fact some of the projects which were awarded maybe 2 years back or 3 years back, at this point of time today they are found unviable. That essentially means also there is a need actually to go back and revisit some of the math and see to it that those projects either they are made viable or they actually go for rebidding. So these are some of the steps which I saw actually a few days back, that NHAI is actually making some statement that some of the projects which were awarded about 3 years back today is no more viable, given the fact that economic slowdown actually is impacting the overall traffic assumption which one would have made at the time of bidding. I think as long as we are actually, there is an open mind and there is a willingness to look at some of these things more from the economic model point of view, looking at the whole math once again, and seeing to it that they are actually put for either rebidding or put for some kind of revival roadmap, I'm sure things would fall in place. I think the way I see it, there is a mindset to look at some of them actually more favorably. At the same time, there is also a mindset to find a resolution. But having now come to a conclusion that there is an open mind to find a resolution, probably one of the things which will remain probably a question mark is, now that they are able to find a resolution for some of these pending issues, would that actually help actually the economy to come back very quickly? Maybe the answer may be no for that. But I think, can we say that the directions will get reasonably clear? Probably the answer is yes from the longer term point of view.
You know, on banks, Bala, what is your view? You think one big round of, let's call it readjustment. Readjustment is left. So say a new government takes charge, right? The new government and the RBI will maybe in the second half of 2014 say, enough is enough. Let's just sort of recognize all the losses that you have on your books.
True.
Because that needs to be done, and then let's let's move on. Because right now, I mean, it's just something goes bad, companies are lent to more, so that I mean there is a fair bit of evergreening which is going on as well. Sure. I mean, especially. I mean, to a large degree in the public sector space, private sector as well. I mean, if you speak to people in the know, they say, well, it's true for the private sector as well. So what's your sense? You think one big leg down is left, readjustments essentially?
I think the way we would look at is clearly the banking issues which currently is being talked about, which is the high level of NPAs. There is nothing new in that. In the sense that this issue has been there for quite some time, and the banks have been recognizing quarter after quarter that some of them are actually as becoming non-performing assets.
No, I mean, for example, the RBI's financial stability report, right?
Yes.
They said the potential for a loan loss contagion. I mean, if a large account actually goes bad, a really large corporate, and I don't know if they think something like that will happen, or they're just sort of saying, well, if it happens, then it's going to impact pretty much everybody in the system, because everybody is exposed to that large player. So contagion in that sense.
Exactly.
Right?
I think that's the point, Prashant. I think one is recognizing the fact that yes, the Indian banking system has got slightly a higher level of NPAs, which could potentially have contagion effect in the whole banking systems, both with respect to their capital requirement as well as the future business growth, especially on the credit side. But now they having recognized this fact a little bit ahead of time through the report that has been submitted by RBI. I think we need to also see actually what are the kind of follow-up actions would happen around that to ensure that some of these issues that is actually hurting actually the banking system is also getting addressed. I think that's why I think some of these project clearances and there is a bit of visibility that could emerge on some of these government-led projects. If it comes, then definitely I think from the banking system point of view, it could set the roadmap with respect to some of those assets becoming performing assets. May not be this year, maybe the next year or so, maybe next 1 or 2 years. I think that's one way to look at it. And second is today the entire banking systems, while of course knowing very well that these NPA issues have been hurting them, at the same time so most of the banks are also getting prepared with respect to actually making the right level of provisions in the books of accounts. At the same time looking at some of those accounts more closely and ensure that some of these companies are also made to realize the fact that they need to actually pay back to the banks if they have to actually remain a successful business person actually in the longer term. But there's also some bit of fear factor that comes in actually the minds of the borrowers. So all put together a combination, if you look at it, there is a mindset, there is a policy framework, there is an effort that is being put in actually to address some of these issues which have been recognized officially and publicly, which that essentially means that need to get addressed. I think that's the direction if we take in all probability in the year of 2014 or 2015, we could see a substantial improvement for some of those problems that has been identified and those problems are being addressed with respect to making it good.
Bala, briefly, what is your expectation? And this sort of falls in the realm of predictions, New Year predictions, which are always hazardous, but what are your return expectations? Equities, fixed income, take a shot at precious metals like gold, silver, etc. And maybe, I mean, if you have any thoughts on real estate in big metro markets like Mumbai, Delhi, etc.
Yeah, I think interestingly, we just at Birla Sun Life AMC, we just put out our annual prediction. And I was also happy to see actually the predictions what they put in 2013, which was actually coined in the name of wall of worry. I'm actually, when I look back, I was quite happy actually that some of our assumptions what we had made for 2013 reasonably turned out to be good.
That's good.
And in the same way, if actually when you look at the 2014 report which is released yesterday, I think clearly there is one strong feeling that is coming that one of the asset class where the large proportion of the public savings have gone is gold. And that is an asset class in all probability I think will continue to underperform in the coming year as well. And second is we have seen actually significant uptick in the real estate segment for the last 5 to 6 years. But now we are seeing actually some bit of oversupply coming in and also the demand slowing down, especially for owning more properties. They also in some sense actually put a brake with respect to the kind of return that was coming from real estate. That means the two asset class, but the large proportion of the public savings have gone actually in the last few years. In all probability actually may get diverted into the other asset classes, which is including fixed income and equity. As far as the fixed income concerns, I think interest rates staying high is a great opportunity for investors, and 2014 once again will be a great year actually from the point of view of meeting the expectation of investors on the fixed income space, given the fact that rates are high. And including fixed deposits as well as the mutual funds, the schemes would actually probably be in a position to deliver better return in the year 2014 as well. As for the equity concerns, I think the sheer underweight into the asset class and also the sheer overweight in gold and real estate, which make people realize that the asset class need to get rebalanced, and that's why I think I see actually the money coming into the equity. Having said that, I think equity also would give relatively a better return in the year 2014 for one simple reason that whatever said and done, there is some of the reforms that has happened in the last few years, such as land bill reforms. Definitely, I think is creating actually better valuations for the existing companies that are listed in the stock market, both from the point of view of the valuations. Second is an uptick that could come actually in the results. And third, of course, a favorable interest rate regime, which I think could emerge in the second half of next year. All factors I think would add to the better outlook on equity. So that essentially means from the equity investors' point of view, as always we have been saying actually that they cannot look at investing in equity for 1 year or 2 years. They have to look at actually for longer term. And if you go by that as a concept, probably we'll may get into a 3 to 5 years kind of bull run for equity market.